Okay, all right, let's move on. Let's focus on the sector of yesterday, actually, which was the metals index. You had the metal index that rallied close on 3%. Aditya Velikar, the senior research analyst at Axis Securities, joins us on the show. Hi, Aditya. Good morning, and thanks so much for joining in. Well, what's taken place in the last month or so is that iron ore prices, global iron ore prices, have collapsed by close to 20-25% approximately. Now, because of that, the street is baking in that NMDC is going to cut prices here domestically as well. What's your take? How much lower can prices come down for iron ore here in India? And any view on NMDC?
Yeah, good morning, Nigel. So thanks for having me on the show. You are right. What we were expecting post the lunar holiday, the demand has not picked up in China, and that is reflected in the pileup of iron ore inventories at China at 140 million tons, which is at an elevated level, and that is what is weighing down on iron ore prices, which have come down from a level of $140 per ton to now a spot level of $100 per ton. So coming to NMDC, it is now trading at near to 30 to 35% premium to imported prices. So this will translate to price cuts by NMDC in future, and which will weigh down on its future financials. So we may expect some pressure on NMDC because of this situation in China. So basically, everything boils down to the demand weakness, steel demand weakness in China, which has not picked up as we were expecting post the lunar holiday. So that is our view on NMDC.
Got it. Okay, all right. But you want to quantify what kind of a price cut could NMDC come about? Because the next few weeks, maybe from April 1st onwards, we could be hearing about these cuts.
So as I said, means it's 35%, 30 to 35% premium to benchmark iron ore prices. So if the surplus in domestic iron ore market builds up, then that premium will slowly evade, and we may see a corresponding drop in NMDC's iron ore prices.
Aditya, so if iron ore prices are going to be weak, you'll expect a company that's non-integrated like JSW Steel, which buys a lot of their iron ore from NMDC as well, to benefit, right? It could support their margins. Give and take everything, for Tata Steel as well, volumes could be fairly good. India business is looking good, but Europe is an issue. So from the ferrous market, what is your picks? If you could give us your order of preference.
Yes, Nigel, you are right. JSW, JSPL, they are not fully integrated with iron ore. So, with iron ore prices coming down, they will have some benefit from that. Also, we can see that the coking coal prices have also softened because of the weakness in demand in steel production in China. So, that have come down from 313 to $280 per ton. Despite of that, the HRC prices in domestic HRC prices have come down. So in Q4, we expect the steel margins to be slightly under pressure, which will impact all these steel players. And if we talk about the long-term valuations, the valuations are not very attractive at this point of time to make a fresh entry into these stocks. But those who are long, they can continue to hold these stocks. So if we assume that China contains its steel production in CY24, then then the spreads may not be that may not fluctuate that much on the either side, on upward side or downward side. But then each stock is expanding their production, and the operating leverage will kick in 26, 27. So from that perspective, the valuations will have some support. So we don't expect a downside to these share prices, but upside will not be very immediate. We expect as the news flows in and as the expansion projects kicks in, then the valuation and the upside will kick in.
All right. Final question, Aditya, before we let you go. You track both these two companies, APL Apollo as well as JTL. APL Apollo has been a big wealth creator, and JTL had a good run of late. But suddenly, because of that preference issue, the stock has corrected. I recall when you joined us last, you were talking about having a preference to JTL. Post this recent, news flow, what is your preference? Would you rather stick to the larger player, APL Apollo?
Yeah, APL Apollo definitely offers a margin of safety. JTL, as you have described, there was an issue with one of the preference shareholder. So, but fundamentally, if you see, JTL offers a good fundamental outlook. The capex, the company has told that the capex plans will continue, and the growth rate of of JTL will be higher than that of the APL Apollo, as it is moving from a lower volume. So fundamentally, there is no issue per se on both the stocks, JTL also. So we maintain our buy rating on both these stocks, 300 for JTL and 1890 for APL Apollo Tubes.
Okay, all right, Aditya. Thanks a lot for joining in and filling us in with your quick take on the metal space. Well,